trade and the market stop you out and at the end of the day moves to your direction? Or have you ever been in a position whereas the market stalled for so many times, then at the end of the day it went to hit your target? Or do you even know how to analyze the market? Do you even know when and how the market retraces those things it forms? That is what you'll be watching in this video. With market structure, you'll be able to understand all this that the market makers does in order to do what? Stop until fake you out from your position and at the end of the day move in your direction. Can't you see? It's so bad for market structure to do that. But you know what? In this video, you will be knowing exactly how, what they do, and where they take price to whenever they want to push the market to your desired position. So stay tuned, watch the video to the end. I promise you it's going to be mind-blowing. And the last week we've treated market structure proper. Today I'll be discussing about how you can predict the retracement or reversal of a particular pair using market structure. Now, we'll be talking about the these two patterns based on the entries with this particular market structure strategy, although there are four, but we're talking about two for now. Now, the first thing I would love you to understand about the market structure, like we all know, is this. The break of the market structure from the lower time frame, that means your primary time frame, intermediate time frame, and your entry time frame, predicts a retracement, or it gives us a retracement. So now I would love us to pick a particular example. I'll be making use of this particular daily top. Now this top, where I put my rectangle. Now I want to analyze here this particular top to the touch of the moving average. That is what I want to analyze on. The particular top to the touch of the moving average. If you look at it, that is a particular level where the daily time frame reverse is a particular level. Now, from this particular level, we want to know why price dropped from that particular top and touch the moving average of the daily time frame. And our moving average is exponential moving average 21. Now I have highlighted the levels, which is the daily time frame level here. Now, the first thing you have to understand is this. We are making use of two time frame here, the primary time frame and the main time frame. Now our main time frame here is the daily, and the primary time frame, according to our time frame sequence, is the 1 hour. Is the 1 hour. Now, this is my rectangle in the 1 hour. Now, if you look at it, price retrace up from a particular level down to this place, touching our what? Touching our MA level. Remember this line, this particular line down here, this last horizontal line, this one I'm moving, is the moving average levels on the daily time frame. Let me indicate it. The MA levels on daily. The MA level on daily. Now, what is this methodology and the schematic behind this strategy? Is this: we want to enter a retracement trade based on market structure and moving average. Now we make use of the moving average for the target from the main time frame. At the main time frame, your target is the moving average at the main time frame. Why? To confirm that price is going to retrace, we make use of the market structure. Now, the three important features you need to understand about the strategy is the moving average as the target, the market structure as the confirmation, then the close as the ultimate confirmation. Why? The market structure gives us the confirmation that yes, market is trying to retrace. First, the close give us the ultimate confirmation that since we have a close of the market structure, since we have the close of the main time frame at the break of the primary time frame levels, it is now ready to retrace. I come again. When we have the break of market structure at the primary time frame, then at the close of the main time frame bar, we have price closing below the market structure level of the main time frame. For the last time, at the close of the main time frame bar, for the retracements to be valid, we must have a close of market structure from the primary time frame. That means there must be a break of market structure from the primary time frame. Now let us take note of this particular level. Now if you look at this, price went up, came down, went up, came down, went up. Now going up, this particular level here becomes our what? Our ultimate level of market structure level. This is it, this particular level here. Now price went up to this zone, went higher like this, form another market structure higher high. Then if you notice, came back to touch our market structure but did not close below it. There was no close. Now this was where we have the close of market structure at this particular zone here, where my rectangle is, where I shape the rectangle to. Now it is at this point, it is at this particular point where we are having our blue rectangular line. This particular place, this was where we have the close of the market structure. Now we've seen a break of market structure. The next confirmation you are looking for is at the close of the daily bar. Now the main time frame, which is the daily, we go to the main time frame. Highlight this, make this bold. Now it occurs around here. This was where the price breaks out. And this particular line, don't forget, let me make it bolder. This particular, okay, let me change the color instead. This particular black line, this particular black line happens to be our market structure level at the primary time frame. Look at it. The market structure level at the primary time frame. Where is it? This is it. Can we see? This is the market structure level. We are still on course. Now the black line is the market structure level of what? Of the primary time frame. Now the blue rectangle is where we have the break of market structure. Now we said at the close of the main time frame. Now where did the main time frame close? The main time frame closes below our market structure. Can you see? It closes below our market structure level. This is it. This was the close. It closes below our market structure level. Now this is the confirmation we need. A close of the main time frame below market structure level is going to do what? It's going to give us what? The moving average target of the daily time frame. Remember I said the moving average is the target from the main time frame. That is where we get our target from. The moving average at the main time frame level. Look at it. It is a retracement strategy. So the main time frame where price want to retrace to will always be the target, and it is the moving average level. We don't want to be greedy. Sometimes it might go lower, sometimes it might go deeper and even form to reversal. But no, what we want to do is to target that moving average level. Now let us do it. Go over it again. Remember I told you the first thing is this. Let me remove everything. This is where we are looking at. This particular place. Okay, this is where we are looking at. This particular place. Now, come out and mark your market structure level of the primary time frame, which is 1 hour. This is the market structure level. Yeah. Our black line. Good. Now, the next thing we want to look for what is a break of the market structure. Now we have the break of market structure here. This was where market structure break. Remember, we make use of the words the close and not the wick for the break of market structure. Now price closes below this particular market structure level at the close of the daily time frame, which is the main time frame, which is daily. So we go to the daily time frame. Can you see? Can you see our rectangle below the market structure level? So this is a confirmation that price is going to retrace. Where is it retracing to? It's retracing to the daily time frame moving average level. Can you see? And that is over how many pips? That is over 82 pips. That is over 82 pips. Now this is how the strategy works, how you can make use of market structure to predict market retracement and where it is going to retrace to, using market structure and what, and moving average. Now this is just the strategy, how the strategy work. This is how the strategy work. But I'm going to show you people two clear example on the particular way we can enter into this type of trade. You know, the market will always accumulate, manipulate, and distribute. So I will show you guys the way they accumulate, manipulate, and distribute based on this particular strategy. Already we know that to confirm this retracement strategy, we need a break of market structure from the primary time frame and a close below the market structure or above the market structure, depending on what you are doing, on the main time frame to confirm it that what, it is ready to retrace. Now the first entry style, well, before we take that, let's go back to, let's use another example. You know, we've made use of the daily and the 1 hour. Now let's make use of the weekly and the 4 hours, and you see for yourself that they repeat the same thing over and over and over and over again. Now let us take for instance the bullish style, the bullish market. Why did the market retrace around this level? So that is what we're going to be looking at now. Why did the market retrace from this low back to the top of this moving average? This is what we want to be looking at now. Okay, sorry, it's from the primary time frame. Let's look for a bigger one in the weekly time frame. Euro USD, Great Britain USD. Let's make use of Great Britain USD. Okay, now I want us to, let's pick from the bullish side. Good. Now let's make use of this. Let's make use of this, and let's know why price retraced the weekly time frame from this particular low to this high. So that's what we'll be checking now. Now let me go to my 4 hours and mark out this area. Okay, we're having it. Okay, now this is the area of interest, what we'll be looking at. Now remember, we want to know why price retraced from this low and touch the weekly moving average levels, which is at this top. Yeah. Now, like I said, the first step, since we are making use of 4 hours as our primary time frame, remember the sequence. The 4 hour is the primary time frame to the weekly time frame, which is the main time frame. Now we will come down here. Remember, the first thing we say is what? Locate the break of the market structure. Now price drops from the market structure level here, drop from another market structure level here, drops. Then this is our market structure level, this particular level here. Now this is our market structure level, of which you've been plotted out. Okay, let me make use of our rectangle, our horizontal line. This is our market structure level here. Now we want to look at what happened. What is the next thing? The close of the weekly time frame, the main time frame. At the close, that the price trade above our market structure level to confirm if it is going to retrace back up to the weekly time frame targets, which is the moving average. Now let's go to the weekly. Now can you see? This is the particular bar This is the particular bar that closed above our moving average, above our market structure rather. And what? It is above. So we have that close above. We have that close above. So what happened? This is what we use to confirm the market structure break at the primary time frame at the close of the main time frame. The primary structure break on the primary time frame at the close of the main time frame. This is how we confirm if the market is going to retrace. Now, I am not telling you to enter a trade immediately when you spot this. No. What we need is what? The entry style. Now, like I said, there are 4 major entry styles based on this strategy, but we'll be looking at 2. We'll be looking at 2. Now, before we go into the entry strategy, let us understand this. The market structure, the market makers rather, will want to accumulate, manipulate, and distribute price in the sense that they've already shown us where they are going to, that they are going to retrace with this our confirmation level. So what they will do is they are going to do this. What they will do is very simple. Look at it. This was where our market structure confirmed the close, right? Now, what they did here was what? They accumulated price here. They accumulated price here. Accumulation. Yeah, this particular box we are seeing is accumulation. Then this particular level, this particular move downward, this particular move downward was the manipulation. This is it, manipulation. They manipulated us thinking that they are going to sell the market. So many people sold from this particular level. They believe that the market is going to trend. They believe that the market is going to trend. So many of them sold from this particular level up here. Some of them even enter from all these areas, but no, the market structure has already, the market maker, has shown us where they are going to by giving us a break of market structure here and a confirmed close. So they are telling us that what? We want to retrace this, but before we do, we are going to do what? Accumulate, manipulate rather, then we will not distribute. It is at the distribution that they will hit your target. So you want to ensure that you position yourself at the distributional level, at that level where they distribute the price to hit the target. So this is your distribution. This is the distribution. And as you can see, price went higher. Can you see? Price went from here to this particular level. From here up to this particular place. Price did that. So this is what they do. This is exactly what the market makers will always do with you. This is exactly what they will always do. Nothing again. This is what they can do best. This is what they know how to do best. They will accumulate the price. This is it. Remember I said it. Once they've shown you their hand, remember they will show you their hand, letting you know where they are going to. Once they've done that, the next thing they will do is to accumulate price. They accumulate the price, they manipulate the price, and they distribute the price to where they are going to. This is how the market moves. That is it. This is exactly how it moves. They will show you their hand by what? By giving you the confirmation. We want to trend. We want to retrace. But in our situation here, they want to retrace. So remember how we know. We notice from what? From this particular place when they broke market structure here. They broke this market structure at this place. Then the next day, they accumulated price. Now, from here to this particular place was where they gave us the confirmation that they are what? They are accumulating. They are trying to retrace price back to the retracement target, which is the weekly time frame. And so what did they do? They accumulated it here after the break of market structure. Remember, the BMS. After the BMS, the break of market structure, the accumulated price. That is what they will always do. They do this in order for you to be what? To be stomp on, fake out, then they move price to their normal way. Now this is the breakout, then they accumulate the price. Look at it. They accumulate price here. The accumulation. Then they manipulated it thinking that they make us think that they want to sell. Now they manipulated it, then they distribute the price up to hit the weekly time frame moving average level. This is the market structure retracement strategy. Now we've talked about how to confirm their movement, where they are going to, how they show their hand. Now we've talked about what they do after showing their hand. They do what? They do accumulation, the manipulation, and the distribution. Now we want to talk about how you can enter this trade. How you can enter the trade so you will not be stunned or you will not be faked out by these particular traders, the smart money, the money makers. Now what are we going to do? Already, the first thing you have to understand is this: after a break of BMS, a retracement. Now it is at this retracement level that we are going to wait for them. At this retracement level. And what will they do? Remember I told you we have 2 entry styles. 4 rather, but I'm going to show you 2 today. Now let us do something by contribute. Let me clear them. All right. Now this first entry method I will show you is the aggressive one. This one comes with the fake out. They clear liquidity here. Now what did they do? They will push price. After the break of BMS is what? Retracement, right? Now instead of them to retrace 50% or 70%, they will do what? They will retrace 70% or 100% rather. In short, more than 100%. They will retrace 100% in order for them to do what? Fake us out. So they will retrace 100% to fake us out at this level. Look at how they fake out people here. Now when they fake us out at this level, then they will now form what we call a mitigation M. Something like this. A mitigated M. Something like this, or W, depending on if they are buying, W, depending on if they are selling, M. Now the mitigated M in the sense that in the higher time frame it can be V, or in the lower time frame when you go closer to the lower time frame it will have something like this. This is the mitigation, like this. Then they move up. This is what they will do. This particular entry style. Don't forget, after the break market structure here, the break market structure at this level, this is where they confirm the entry. Then they will do what? This is the retracement. This particular area is the retracement. But this time around, instead of them to retrace 50%, what they do is they retrace more than 100%. They retrace more in order to do what? Fake out traders who has their sell stop level. They will clear liquidity here. This lower low, this swing low. They clear liquidity. They stop out traders, They take our stop loss. Then at the end of the day, immediately, the next day or even during that day, they will now do this. Can you see? This is what happened here. They took price up like this. They took it up. They brought it down. They brought it down to this level. Mitigation. Then they took it up. Can you see? This is what they always do. Then they took it up. Mitigation. Now this is the first part you will see. Now, this is the first entry style. Don't forget, after the break of market structure, they will retrace, but instead of retracing to what? Instead of retracing 50%, let them stop at this particular level. 50%, yeah. If we had our Fibonacci 2 with this, instead of them to retrace 50%. Let me make the Fibonacci bold so you can see clearly. Now, instead of them to retrace 50% either at this particular 50% level or this particular 61.8, they will go below 100% to fake us out. Now, when they fake us out, what they will do is what? They will now push price up, forming a what? A V pattern. They will form V pattern. V, or a mitigated what? A mitigated W, because they are buying. Now, this is the first entry style, very aggressive. I call this one the stomp hunt style. They stomp hunt us, they fake us out, and they take price up to our target. Now, the second one they do is this. Please, let's pay attentive to all these entry style. Pay attentive to them. It is very, very important you know this. And always, please go back and back test. Go back and back test after doing all these things. They show their hands first, then they accumulate, manipulate, then they will distribute back to the final target. This is how they move the market. Every day, every minute, every seconds, every week, and every month. They have their cycle. Now, this is the first entry I'm showing you, the first entry style. So you can come out and wait for them at the what? Your former low or your former high. If you are selling, or now we are buying your low, then what will they do? They will now change their hand by doing what? By forming the V or the mitigated W, and they will shoot price up. Now, this is the first thing. Now, the second one, let us go back to Euro USD. Euro USD, where we analyze the sell market. Where we analyze the sell market. I'm trying to get the particular place where we are going to pick our retracement from. Okay, the Euro USD daily time frame. Now, the daily. Now, let's take a look at this particular level. Okay, this is what we look at. Yeah, that was the area we looked at. Okay, so Control B. I use Control B to highlight this on my system to bring out every things you've posted on your chart. Now, like I said, the first thing is what? Look for the break of market structure, and the break of market structure was here. This particular zone here. This was the last market structure. Then the price came up, and this was the break. Now we've located our break of market structure. The first thing first, the break of market structure. Yeah. Now the second thing is to go down to the main time frame to confirm if we have a close below the market structure. Now some people will ask me, when price did not close below the market structure, what does it mean? It is a failed break in market structure. A failed break in market structure. It is a fake out of market structure break. I have that at the back of your mind. I will explain that to you on further entry styles. You will be able to understand that. But for now, let's focus on this. Now, like I told you, come first of all to your primary time frame, rather, locate the break of the market structure. This is the break of the market structure. Please note that you want to be doing this on your Saturday during your weekend analysis when you are spotting the trade for the week. That is what you want to be doing with this, or during your analysis. Now, back to our case study. I told you the first thing first of all is to do what? Is to look for your break on the market structure. This is the break here. Then what happened? Go down to your main time frame, which is the daily, and see if we have a close below the market structure. Yes, we have a close. Price closes below the market structure. This is where price closes below it. Yeah, this particular line. So automatically the market is telling us that what? I want to what? Retrace. And where am I retracing to? Our target, don't forget, it is the moving average level of the main time frame. Our target, which is the daily time frame. Now this is the moving average. Now what did I tell you? After they've shown us all this, they will do what? They will now come down to what? Accumulating price, distributing it. Sorry, they accumulate the price, they manipulate the price, and they distribute it. I will show you how they did that. Now, this is our break of market structure. Now, if you say this is your accumulation, yeah, our break of market structure occur here. Yes, occurs here. This is this particular place. That was where it ended. Now, our accumulation started from here. The accumulated price down to this place. They accumulated it down to this place. Yeah. And after that, they did what? They manipulated us by doing what? Going back to the top, forming the what? The LPS. LPS is from the last point of supply. They formed the LPLs, the last point of supply. They formed LPS at this level. LPS, yeah. Sorry. LPS. Yeah, they formed their LPS here. And what did they do? They now distributed it to touch our target. This is our target, sorry. To touch our target. The distributed price to do what? To touch our target. It is very important you know. You know all this as a traders. What did I say? I will repeat this and over again. They will show their hand. Then after showing you their hand, why are they showing you their hand? They are showing you their hand that to let you know that this is where they are going to. So when they show you their hand, the next thing they will do is what? They will now want to reduce the number of people that will follow them to that particular destination. And how do they reduce it? By using the AMD, the accumulation. Don't forget our A stands from accumulation. The accumulation, the distribution, the manipulation, AMD, manipulation, and the distribution. The distribution is them taking price to their final level, the target where they showed us they are going to when they show their hand. The accumulation is to get more traders involved. The manipulation is to dump those traders that they packed along. Then the distribution is for them to take their profit at that particular point that they targeted from the main time frame. So this is it. This is how they do. So now let us check about the entry style that was used here. Let me clean all this. The entry style that was used here. Now this was the entry style. They drop price down. Remember I told you after a break of market structure there's a retracement. Yes. Now what did they do? They retrace back to this particular level, the market structure level. Can you see? That was where they retrace price back to the market structure level. The market structure level. The market structure level, yeah. Now there's a particular volume signal that was shown at this particular place. But aside from the volume, they came back to retest this market structure level here. Our market structure support turned resistance. They retested it, and what did they do? They did something like this. They came down here to form their what? Their M, a tweezer top. They drop price. They drop price. This is what they did. With this, I'm trying to analyze these two candles. Let me highlight them. These two candles. I'm trying to analyze what happened there. So what did they do? They took price up like this. Then the first candle was a what? A bullish candle that closes this way. This, like this. it closes like this. Then at the open of the second candle, they went back up, a twister top. They did not carry price, they did not close above this particular level. You understand? So what they do is they formed a M pattern. Look at it, M, and they drop price to the target. Can you see? This was the accumulation. The accumulation. Yeah, from this zone to this point, this was the accumulation. Then this was the what? The formation of their entry style. The M, remember the M, letter M for a sell, letter W for a buy. Now they form the M pattern here. Look at it. And so they push price to their ultimate target, which is this place. So this is a very, very conservative entry style, a very, very conservative one, and a very, very fast one. They did not clear the top. That means they did not take price up to this place. They did not take price up to this place. So this was the two entry style they use. Remember I told you it's 4, but I'll be talking about 2. But because of you are currently still listening to this video, I will be showing you one more entry pattern, and that is what? This. Now remember, I said after the break of the market structure, which is at this level, they will do what? They will retrace. Now the third style is this. They will normally retrace back to where? Either the other block. They retrace to the other block, this particular other block here. This other block level. So they will either retrace back to these levels, this zone. This is where they will retrace to. And when they retrace to this place, they will retrace like this. And when they retrace, they will now do what? The same pattern they did here. They will now form their M and W pattern. But for this case, it's M because we are selling. They will form their M and they will now drop. Now this is what they do. This is the third pattern. If you will stick with me, we can look for a particular style. They will show their hand, like I told you the summary. This is what they will do. They will show their hand by telling you they want to retrace. And how did they do that? At the close of the main time frame, there will be a break of market structure on the primary time frame. Now, when they have the break of the market structure, the second thing, they will retrace price. Don't forget, after the break of market structure, there's always a retracement. They will retrace price. And when they retrace price, what will they do? They will now form their what? Accumulation, the manipulation, and the distribute. So your own aim is to join them while they are distributing using the entry style that is being discussed in this video. So please, I would love you to send down your questions and your comments on the comment section below. You can join our community to ask more questions, FOREX Mahadum. And also, you can subscribe and please like this video. Thank you.